Well, there's a few reasons why we've had a boom in real estate. One certainly is low interest rates. One is lower input costs, at least in the past. The other is what I call the Great Migration, and I had predicted this many years ago. I wrote about it. I spoke about it, and there was only a point to which people would continue to pay high income taxes and high real estate taxes in a lot of cities and states. Frankly, it gets to the point where it just didn't make sense to live in some of these states. And I mentioned before that, New Jersey's largest export is millionaires. Well, the same thing could be said for New York and California. We live in Henderson, Nevada, and if you drive around Henderson, Nevada, you see a lot of California license plates, and these are people who have left California and have moved to Nevada. Same thing in Arizona, where my daughter lives. There's a massive migration going on. People are flooding into Texas, Arizona, New Mexico, Nevada. Florida. They're leaving New York, New Jersey, Connecticut, California, Illinois. And part of the reason why they're leaving is because income taxes are too high there. Part of the reason they're leaving is because real estate taxes are too high there. And add on to that, a lot of the social unrest that I talked about in the first part of the interview, and people are saying, we've had enough. All right, you know what? I can run my business from home using Zoom, using other technology, the internet. So I really physically have to be in New York City. I've spoken to a lot of attorneys and accountants, people who, when you turn back the clock 3-4 years ago, they rented out several floors of some very nice real estate in Manhattan. Well, they no longer need 20 floors in these buildings anymore. Now they maybe only need 10 floors. All right? Maybe they only need a few people to man the phones in offices. And maybe the partners, have to come in once or twice a week, and maybe some of the associates have to come in 3 or 4 times a week. You don't need all this expensive real estate. And to what extent can you relocate people for less money to other places, to Pennsylvania? People are leaving, for example, Long Island. And I know about this because my wife and I, we own a house up in the Adirondacks. People are selling their homes in the New York metropolitan area, selling a home for $750,000 and buying a beautiful home up in the Adirondacks, in Queensbury or in Saratoga Springs for half the price, and living a pretty good life there.
Yeah.
And putting half the money in the bank and not have to pay some of the real estate taxes that they paid in Long Island or in New Jersey. It's happening. It's palatable. You see it happening. But I think the problem is that a lot of politicians just don't want to admit to it. And the proof's in the pudding. If you just look at the recent census results, and if you look at obviously what's happened in terms of some states losing representation in Congress and some states gaining it. There are a lot of marginal buyers today who are relying on lower rates of interest, and they may get squeezed out, or shall I say that the next marginal buyer may be squeezed out. But I don't think that we're going to have the type of subprime problem that we had 2 decades ago. But I definitely think that what we're going to see is we may get to the point at which the amount of defaults on mortgages may increase. But more importantly, I think the ability for people to be more mobile than they have been in the last few years is gonna decline, and so most of that migration may have already taken place, except for the millionaires who basically are going to make that decision on a year-to-year basis. Most of the millionaires will leave at the end of a calendar year. So we got a few more months until people start leaving again at the high tax brackets. But for the most part, for the people who've left Manhattan and gone to the New Jersey suburbs, or people who have relocated from Hoboken into some of the some of the New Jersey suburbs because they're starting families, that I believe is slowing down. And if interest rates rise and the cost of building new homes goes up, then I think you're going to see a slowing down of that. But it doesn't mean that the migration is going to end. It's just going to slow down. Property that we sold within the last year. No, I think having commercial properties, whether it's office or whether it's retail, I think is in for a world of hurt in the next few years. You have to remember, especially some of the larger real estate operators, they are very sensitive to interest rates because they are highly leveraged. Your ability to leverage diminishes as interest rates go up. We've basically been hooked on low interest rates for a considerable amount of time, and if inflation rises, then the offset to that is going to be higher interest rates, and we're going to have to get used to that, which means that real estate operators are going to have to readjust the way in which they operate. And how do they do that? Well, they either have to borrow more money, leverage up more, and they have to pass on their increased costs, which is going to be hard because occupancy rates are down. And so there's going to be a shakeout, I think, more on the commercial end than there is going to be on the residential end in the next go around. What's also interesting is I'm beginning to see and hear from Americans that they're looking to leave the United States. I know a lot of people who have family roots in some European nations who are getting their passports there. People have to understand that a house is a place to live in, and your home. Or when you make a decision to buy a home, it's versus the decision to rent. Okay, so yes, over long periods of time, you'll be able to build wealth in your home, but it's a place to live, and people also don't understand that it costs money, to own a home and renovate it. My wife and I just did a renovation to our house in upstate New York, and we did to our house in Henderson. And it costs money. There's no free lunch in owning a home, but the decision should be, do I rent or do I own a home? And I think people need to recognize that. And certainly I instill that with my kids. I still think that smart investing is a place that you want to begin. And then once you have enough money for deposit on the house, you reallocate those assets into your house. There's nothing like living in a nice house with a backyard to raise a family, but it's an economic decision. We had this tremendous boom in technology stocks over the course of the last 2 years. And I think you have to start taking some of that money off the table. Now, we've done fantastically well for our clients. But it's time to ring up the register. And I think it's time to start going from some of the leaders of the last 2 years into some of the laggards from the last 2 years. We stayed away from energy and materials and financials those 2 years, and it paid off handsomely in our growth portfolio. Now we're taking some of the money out of those technology stocks and we're putting into the metals, the mining, the infrastructure type of stocks. There's no doubt we need to rebuild roads and bridges in this country. We're also seeing that obviously the price that companies can earn by extracting items out of the ground is increasing, and their cost of doing so isn't increasing at as alarming a rate. So, allocate some of your money to mining stocks or material stocks. Allocate some of your money into industrial stocks, and lighten up a little bit on the technology stocks that have probably overdone it. What I like to say is that you can always find growth, but people mistakenly think that technology is the only place where you can find growth. And we're finding opportunities for growth elsewhere, and so we're doing that. It may mean that the rate at which you can earn money in growth stocks is not going to be as fast as it was the last 2 years. But at the same time, we offer to our clients not just a growth portfolio, but a dividend value portfolio. And I think what we're seeing is that capital is flowing out of growth and into companies that are paying dividends. And we're seeing that because there's a fear that interest rates are going to rise. And so what we're having some of our clients do is reallocate some of the assets from growth, especially some of the profits we've made them over the last few years, and put it into dividend value-oriented stocks. Sure. The other thing we've done is we've just rolled out literally a couple of days ago a new consumer discretionary strategy and portfolio, because we think that, yes, the consumer is going to have more money in their pockets. And one thing we know about Americans is that if you put $1 in their pocket, they're going to spend $1.50. And so we think there's some opportunity for people to begin to travel again, to go out to movies, to get out of the house and do things that they couldn't do for the last few years. So that's kind of where my mind is when it comes to investing our clients' portfolios.